Hi guys, good morning to everyone. I'm Dr.D.Radhasri, Assistant Professor, Department of Commerce. Today we are going to see about financial accounting. In that we are going to see about accounting for depreciation. Let we see about what is the depreciation of accounting in the financial accounting. First, what is depreciation? Depreciation is a measure of wearing out of consumptions or less in the value of an asset that are depreciation due to use, time period or obsolescence due to the new technology and marketing changes. Depreciation is an allocation in order to charge some amount of money as depreciation. Amount is in each accounting period. It can be taken during the expectation useful life of the asset. When depreciation is going into improving their physical directions of wear and tear, absolutely when it can be increased or it can be decreased, it can be using of the product only. We can able to touch it can be applied for the goods in the service. Depreciation is not only taken for the particular product, it can be used for every product of depreciation as measured in the consumption of the value of the asset. It can be take place by useful of the asset in the lifetime of the periods. In some cases, it can be taken for the year land. Land is not able to add depreciation. When the land is year by year, it can be increased. So we can't able to find out the depreciation for the land. But in some any other product, we can able to find out the depreciation. When we are using a product day to day, it can be usages increasing, but later on it can be show the year low cost in the operation of the 1 year. For example, we can say you are purchasing a machinery. Routinely, we are using for the 1 year. Suddenly, the end of the year, it can be reduced by the usage of the product. This is known as the depreciation. In that way, only we have find out the in year by years it can be take place by the depreciation in the lower case. The depreciation types we can able to see about the straight line depreciation and double line method or return down value method or sinking fund method and annuity table method, insurance policy method we also having, and depreciation method also having, revaluation methods also we having in the depreciation, and finally we can able to say the machine hour rate method. It can be take place by identify the product in different value. In our ways can also we can able to identify in the mine or ways we can able to when taking a lease for the mine, it can be able to the mine is going to buy one by 1 year, it can be reduced their product, so we can be able to identify in the depreciation method also. Revolutions method, in this revolution itself we can able to find out the starting price and the year end of the closing price. We can able to identify that the difference of this prices in the declining method. The unit of product measures method, we can able to identify some of year texture in the methods. In the way only the various anti method have been take place. In that way only the double return value and value method of stating in the straight line method. When the amount is taken for the straight line method, it can be helpful for the year, decreasing the same amount for the all the years. When the machine we are purchasing for the first year and we are selling in the fifth year, so it can be able to find out the year 5 years. The same amount has been reduced for the 5 years. It can be shown in the straight line method. This is the importance in this straight line method. As we are comparing to the double line method also, we can able to say the return of value method. It was changed by year and year. Depreciation will be changed in year by year basis. This is known as the difference of the straight line method and return of value method. There are 8 methods in the year depreciation of value method. Understanding of the concept of depreciation, it can be full and full. The value of the asset is going in a decreasing way. It can be shown in that proper way only we can able to identify the depreciation having take place by going in the movement of the goods, how we are using their product, and can be able to find out the value. It can be shown in the cases of arranging the such various things. In the value of the choosing the price appreciation depreciation methods, it can be considered that the careful of the changing of the straight line method also. By understanding the policy impact of cash flows can be depreciation is year by year, we can able to find out the decreasing. When you are purchasing an asset, automatically it can be decreasing. This is known as the depreciation method. Thank you for the listening of the accounting of the depreciation.